Good evening, everyone, and thank you so much for joining us here on our Facebook Live. It's only the second one of these I've ever done, so quite exciting. So thanks for joining to hear us talk about the budget in West Berkshire over the next 12 months principally, but we've also got a bit of longer term planning to share with you as well. My name's Councillor Ross Mackinnon. I'm the ward member for Bradfield over in the east of the district, and for my sins, I'm also the executive member for Finance, Property, Commissioning and Economic Development, but finance is the key part of my role, which is why I'm here tonight. Delighted to be joined by Joseph Holmes. Hi, Joseph, who's our Executive Director for Resources at West Berkshire. Means he's the officer primarily in charge of the finances. So between us this evening, we have got some key headlines about the budget. The proposed papers, the council meeting which will approve the budget is going to be in the first week of March. So assuming all gets approved at the full council meeting, then the figures and the key areas that we're going to be sharing with you this evening will apply to West Berkshire for the year to come and also for a few years after that. So the format for this evening, I've got a few slides to share with you. It's not going to be death by PowerPoint. It's not going to take too long, just 5 or 6 slides which show you the structure of the budget, where we're spending our money, where we're investing in the capital programme, some of the challenges that we're facing as well. So I'll go through those and then we'll finish. We'll sort of break back into this format here, where you guys can ask questions. So our assistants are working away in the background, and they're going to pass the questions that we receive on the night through to me and Joseph. So we'll answer those. Also, I think we've got one pre-submitted question which we'll answer as well at the end of the presentation. So I'm going to get started. I'm going to share my screen and just take you through a few selected highlights of the budget that we're proposing. Okay, so before we start on the budget, which really covers the financial year, which begins in the 1st of April, so it's the 2022 to 2023 budget. Just a couple of points about the financial year that we're currently in. So the good news is that the budget we set last year, back in March 2021, we're very close to breaking even on that. So we're not predicting a significant over or underspend at all in the current year. That protects our reserves position, of course, which will be relevant for the budget to come. It's worth mentioning that we've received a significant amount of funding from central government to help us through the pandemic. Now, as residents, we've all had rather a tough time of it over the last couple of years, what with the COVID pandemic, and now, of course, we've got a bit of a squeeze on the cost of living, which, of course, is always in the uppermost in my mind when we're setting the budget. So central government have been really excellent, actually, in providing funding to not just us, but other local authorities as well, which has certainly helped sustain our financial position. We're coming to the end of that. So we don't expect significant sums of money coming through from central government to the same extent that we've had in the last couple of financial years. That being said, though, the council's still performing a really important role in getting targeted funding to those local businesses who really need it. We've all heard the stories about how challenging it's been in the hospitality and leisure industries in particular. So we're still distributing hardship grants and grants to support those industries through these current unprecedented tough times. So if you are running a small business and you think you might be eligible for those grants, then please do get in touch and we'll be able to support you and provide you with all the information you need. We expect to be able to provide further relief through business rates in the year to come as well. So don't sit there in silence. Do get in touch if you think that we are able to help. The budget itself is split up into 4 papers. If they were combined into one, then it would be a colossal and unwieldy document. And the 4 strands of the budget that we're going to be setting in March are in front of you now. So we've got our investment and borrowing strategy. As the name suggests, there's 2 sides to a coin there. The council does have to borrow money on occasion, which it does from central government principally. And also we have cash excesses, cash reserves. It fluctuates throughout the year, really. So the investment and borrowing strategy details where we put our money to earn as much of a return as possible when we do have a surplus of cash without putting it at unnecessary risk. and also sources of borrowing that we'll consider, in addition to our principal source of borrowing, which is the Public Works Loan Board, which is the fancy name for central government, really. You may well be aware that in 2020, we launched the UK's first community municipal investment, which is where members of the public directly lent the council money, £1 million. We were delighted that we managed to reach the full allocation of that, and that's been invested directly in our environment strategy, which is helping the district remain a green and clean place to live. The medium-term financial strategy looks at the medium-term outlook. We look at the next 4 years, including the year to come. It would be rather short-sighted, wouldn't it, just to set a budget for the year to come without considering funding pressures and income streams and potential savings that the council is going to incur in the years to come. So the medium-term financial strategy takes a medium-term look, and it's important when we're planning on how much reserves we want to use this year, or how much reserves we want to put aside this year. We've always got an eye on those future expenses, the future challenges that our budget is going to put us under. So longer term, medium term financial outlook in there. Probably the two papers which arouse the most interest on budget evening are the capital strategy and the revenue budget. If I can just take these a little bit out of order, the revenue budget there sets the operational budget of the council for the year to come. So the council tax decision will be in the revenue budget. The spending on core services is in there. Unlike central government, we can't simply borrow money to plug a gap. Local authorities are legally required to set a balanced budget, which means the expenditure that we make in any one financial year has to be matched by income or the use of reserves. The capital strategy invests in the district long term. We take a 5-year look at the capital strategy, and this is where a lot of really good news, headline grabbing investments will be. So we're investing a substantial amount of money in the district's infrastructure. This is new schools and refurbished schools, improvements to highways, investments in active travel and walking routes, cycle routes, leisure improvements, all these things which are going to last for the long term to improve residents' lives and make West Berkshire a really great place to live. So without further ado, let's have a look at these in a bit more detail. This is a lovely graphic, actually. It shows you the challenges that we face when we're setting our revenue budget. So in the year to come, we think that we're going to be spending £150.5 million, okay, which means we're going to be bringing in £150.5 million in terms of income and the use of reserves. I think what is a striking graphic is that if you look at the section over here on the top right, providing social care to adults, that's care homes for the elderly and also supporting adults who are vulnerable and need a bit of a helping hand, as well as children and family services support. That's £50 of every £100 we receive. 50%, half of the entire revenue budget is spent supporting those vital services. And with demographic changes and the ageing population, that demand is only going to increase. So a real challenge we have is making the budget go as far as we need it to support those vital services, as well as the others that are here. You can see here that 10% of our budget is spent on the environment. That's not just on green improvements and countryside issues, but also roads and infrastructure is in that service. We've got development and regulations, 4% of the budget on there. That's planning services and related activities. Communities and wellbeing, just 2%. Waste and recycling, 5%. Education, 6%, and so on and so on. But no matter how you look at that graphic, your eyes are just always drawn to the top right. And that proportion of adult social care as part of the budget is only expected to increase. So when it comes to setting the revenue budget for the year ahead, it's a big balancing act that Joseph and I have to undertake. Yes, we want to invest in core services, the demands of which were hinted at on the previous slide there. We are always mindful that we need to do things as efficiently as possible. We don't want to take money from residents out of residents' pocket if we can possibly afford it. So we're always looking at improving the efficiency of the services that we provide. Those cost savings will be along the lines of staff savings where possible, more efficient use of our human resources, as well as digitisation of services and many more. The council also looks to generate income where it can. Our commercial property portfolio, for instance, is budgeted to bring in nearly £1 million next year. That's £1 million that would otherwise have to be raised from council tax residents. £1 million roughly is about 1% on the average council tax bill. So we're always going to try and alleviate the burden on council taxpayers wherever possible. Unfortunately, though, West Berkshire as a district is rather heavily geared towards council tax. A rather large proportion, much more than other local authorities, comes in from council tax and the adult social care precept. So this year, we're proposing a 1% increase in core council tax, as well as a 3% adult social care precept to help go towards funding that demanding service, as we saw on the previous slide. So that means an increase in your total council tax bill of 4% this year. It's important to bear in mind the context of that decision. We only increased council tax last year by 1.99%. We were one of the lowest local authorities in England at that point. And that means that this year, we could have raised the council tax bill by up to 6%, but we've chosen not to do so. At the moment, with the cost of living crisis and the pressure that so many residents are under with their personal finances, we felt it was really important not to just automatically go to the full council tax increase that we could do. So by keeping the increase at 4%, which is well below the current rate of inflation, we hope to have alleviated the burden on residents by a little bit, as much as we can. But we do recognise that residents will be feeling the pinch, not just from their council tax, but from their energy bills in particular, and all sorts of other household demands on their finances. That's why we do have a council tax reduction programme for those in the very lowest incomes. Those who are a member of the council tax reduction scheme, or those who apply to join it and are successful, we're proposing to give them £150 off their council tax bill in the year to come. So it's important, if you think, of course, eligibility criteria apply, but if you think you may qualify for this scheme, then please do get in touch with us. Where's that money going? Well, we've seen the demands on the budget that come from social care. There's significant investment, more than £5 million of extra investment going in this year to help support our elderly and vulnerable residents. At the same time, we need to support our very buoyant capital investment programme. I'm coming to the capital investment in just a moment, but we're going to be investing about £220 million in the district across various areas over the next 5 years. That money has to be invested wisely and paid for, and about 10% of the revenue budget goes towards financing the capital programme. The good news is, though, that the borrowing that we undertake to fund that capital programme must be sustainable. And as a percentage of the revenue budget, the capital financing requirement is going to remain stable at between 10 and 11% throughout the term of the medium-term financial strategy. So where is that 220 million investment coming from, and where is it going to in the capital programme? Well, over the next 5 years, we've got 12 million in funding for our new leisure strategy. That involves playing pitches, leisure centre improvements, Lido improvements in Newbury, and many, many more. We've got £22 million going into our environment strategy, helping the district work towards their ambition of being net zero in the carbon emissions by 2030, as well as protecting the countryside and enhancing our green spaces. 53 million going to education places and new schemes. That's new primary and secondary schools, refurbishment and maintenance of existing facilities, and making sure our schools represent an outstanding place for our young people to learn. 38 million of the capital programme is going on highways infrastructure. That's roads, that's active travel, it's cycleways, walking routes. For instance, £3.8 million alone is being spent on improving cycleways throughout the life of the capital programme. Other areas of the capital strategy, which don't make the slide but are nonetheless just as important, over £6 million providing occupational therapy equipment to help residents who need a bit of a helping hand to live in their own home, the equipment they need to do so and live a fulfilling life. £4.5 million specifically going into our playing pitch strategy, the new Newbury Sports Hub at Monks Lane, a very exciting and spectacular new facility, which is planned to open in the next financial year, and many, many more. Finally, as the last slide of the organised presentation, back towards the end of last year, we asked you, the residents, to suggest to us where we should spend our money. And we've got a nice summary of where you thought we should raise council tax in the Precept, and what services those money should be directed to. What's quite interesting is that the average response on council tax in the Precept, the average suggestion was to increase council tax by 2.3% and the Precept by 2.4%. And that would give an overall raise in bills of 4.7%. So we're pleased to have come in under that estimate with the decision that we've made. And then also quite encouraging is that the services over to the right-hand side there, these were earmarked for the lowest cuts by our residents who responded to the simulator. If you can see there, it's youth services on the far right, family support, children's and adult social care. These are the smallest cuts. Perhaps predictably, customer services and support services were earmarked for the biggest cuts there. But good to see that those core services escaped the axe of our residents more than the others. So full details of the responses will be available on our website to that simulator. Okay, so that reaches the end of our sort of prepared presentation. So Joseph, I think we've got one pre-submitted question. And well, actually, before we do that, Joseph, I don't know if you want to add anything to the comments that I made on the slide.
Right, thanks, Ross.
All right, good stuff. In which case then, we've got one pre-submitted question, I think it was from Paula Saunderson. So I don't know if you want to sort of say what the question was and then provide a response to it. And then I can already see some questions coming in the chat, so then we can turn our attention to those.
Okay, so I'll just go through the question. It's a question in a variety of parts, but it's around adult social care. So the question asks if you can explain the full funding for adult social care, its sources, and what happens once the government portion is announced, and why does the government agree their part later than ideal for the local budget rounds. Then it also asks what happened to the underspending in 2021, in the last financial year, £3 million. Was it used for 21-22, or was it just a theoretical accounting transfer to reserves? And the final part of the question was if Ross could give us an idea of the split between the working age budget and the older adults budget of over 66, and roughly how many people in each category and given assistance of some sort from that service. So I'll just answer those different parts. So on the first part, there's a real wide range of funding for adult social care. So some of the figures that Ross has provided already gives the net adult social care budget that you should see is about 38 pence in the pound of everything we spend, but roughly looking at last year's budget, it was just gross, just under £70 million, and there's about £18 million worth of income which comes directly into the service for a variety of charging mechanisms. So the net budget, therefore, is around about the £50 million mark, and that is funded via the same sources of funding for the whole of the council. So just under 75% of our funding comes from council tax or for the either for council tax or the adult social care precept. So that's just under 3/4, and then the rest is made up of retained business rates, and then we do get some specific government funding, but we are very highly geared towards council tax. So that is where the majority of the funding comes from in the past. But then we do have some new funding announced specifically for social care, including adult social care. That includes the Better Care Fund of over £6 million, where we work closely with the NHS. And then also we've got a specific grant of £3.9 million for social care as well. And then as part of the upcoming adult social care reforms, which will take place in 2022-23, we've been provided with just over £300,000 for a new market sustainability and fair cost of care fund. Quite a mouthful at that one, but just over £300,000 from that for 22-23, and we expect to have higher amounts in 23-24 and 24-25 on that. And we obviously expect the government to announce further funding assessments and rounds as we gear up towards that big reform. And the question, the second part of the first element of the question was around why the government announces things at different times to us. So the Department for Levelling Up Housing Communities is where we get the local government finance settlement from, and we have that announcement just before Christmas, but all of that is still provisional, so we don't have the final amount actually yet. And then central government issues a variety of further grants in the weeks after that date. So, for example, today we found out only a few hours ago the public health grant allocations. So central government worked a different timetable for us, which isn't always that helpful because some of the grants do come through quite late to us, but they just work on a different timescale for their budgeting. But our main grants we do know about just before Christmas. Then there was a question around what happened to the underspend in 2021, and that amount did go through into reserves and then was used to help the 2021-22 budget. So Ross mentioned there that the council kept council tax rises down to a much lower level compared to other authorities, and one of the ways that we did that was by using that underspend and then using it directly from reserves to help support the budget we're in at the moment, 2021-22. Then the last element of the question was around the amount of funding which are split across different ages. So budgetary wise, about 46% of the adult social care funding is spent on those under 65, and about 54% is spent on those over 65. The actual split between the different types of setting, so nursing, and this is actually on client numbers, nursing represents about 10% of our client numbers, 16% in residential, and about 74% in community settings. And I think that answers that question, Ross. That's quite a long response.
I think you did very well with that, Joseph. An excellent comprehensive answer. That's very good. Well, we're seeing a few questions being fed through to us from our assistants in the background there. So a question here from James Gore. Does the council regret failing to raise the ASC precept last year? And how much does failing to do so cost the council with respect to the relative value of the receipts adjusted for rocketing inflation this year? Well, look, I'm delighted to say no. I would absolutely do not regret failing to raise the precept last year. And in fact, it's good to just restate that point. Last year, we did not take an adult social care precept. I think it's important to remember that at budget setting time last year, because the adult social care service, it went through a great deal of volatility during the pandemic. Sadly, we had quite a few of our residents unfortunately lose their lives during the pandemic. And the impact that had on the demand for the service and the budget, it was quite significant. So in the end, we had a significant underspend in the 2020-21 financial year. And I certainly considered it inappropriate to raise the precept at all, given that underspend. As Joseph's mentioned, the underspend went into reserves and has helped to support the budget this year. And we're very pleased that that's the case. But no, I'll never apologise for keeping council tax rises as low as possible. And this council will always strive to do so. A second question from James. Do we regret stating that the CAB was not an important service for vulnerable people? Well, I'm pretty sure we didn't use those words, and I would reject the premise of that question. Next up, Annie Oakley. The commercial property portfolio is a valuation of 54.185 in the budget, compared with an acquisition cost of just over 62. One of the retail properties halved in value. Given the 8 million in value, do you have concerns about the impact of the drop in value? Thanks for that question, Annie, and no, absolutely not. It's important to bear in mind that the commercial property portfolio is a very long-term investment indeed. The investment is not to chase capital gains. There's always going to be capital value fluctuations of the properties that we've bought. We're very well diversified, both geographically and across different sectors, so industrial, retail, etc. The periodic fluctuations in capital value of the properties has no impact at all on the budget, revenue or capital. It would only have an impact if we plan to sell the property at loss, which of course we don't. We're planning these investments to be for the very, very long term. The great news about the property portfolio, though, is that it does bring in nearly £1 million. That's £1 million, 1% extra on council tax that would have to be raised from residents if it didn't exist. And again, the second part of your question, the commercial property portfolio has never generated a loss for the council. In fact, it's always generated substantial income over and above capital repayments, over and above costs. So the property portfolio is a great success story over the last few years. Another question here from James.
Sorry, Ross, do you want me to just respond on?
Sorry, Joseph, yeah, carry on.
That's all right. And then after, as to where the money comes from in reserves, and actually as part of the commercial property portfolio, some of the income that we receive is then set aside into a risk fund for where there may be a loss of income at one another point. So the money is coming from that specific reserve, which is set up during kind of the good times and when the fund is generating that net income specifically to then soften any downturn which may well happen within the commercial property fund, which is exactly what's happened here.
Thanks, James. Sorry, thanks, Joseph. I've got a question from James. Why did the budget challenge exercise not prevent a full range of options and balancing the books? For instance, abandoning councillor allowance increases or raising the tax rate above the referendum threshold. Well, I know that Joseph can talk about the tool itself a little bit, but in terms of councillor allowance increases, that is a tiny part of the overall budget. And I think if councillors would freeze their allowances and it meant that the adult social care budget was protected more than it is at the moment, then we would do so. But I'm afraid it is a tiny part, although always a political club used to beat the councillors. Joseph, I don't know if you want to talk about the model itself.
Yeah, so the model is one which a number of other councils do use. So we have to balance between making it very, very specific towards making it short enough so that people try to get as many people as possible to complete it. There was some free text at the back as well, and we've included within the budget papers which are going out and have gone to executive on Thursday some of the comments which people raised as part of that. But there are some constraints within the model, but we use it there to give people the different options. And actually, when we launched the model, we did allow the option to go to a 6% council tax rise, which would have triggered a referendum, and it said that in the simulator. Obviously, we weren't aware at the time that we would potentially be able to get to that, but we did allow and put that in there. Sort of highlighting the warning, this may well trigger a referendum. So we tried to capture that as part of the budget simulator.
Thanks, Joseph. Good stuff. Next question we've got from Graham Story. Thanks for your question, Graham. Do we believe a 2% salary inflation assumption is fair, given the impacts of the cost of living crisis on your staff and inflation forecast to hit 7%? Well, that remains to be seen, Graham. What I'll say, and Joseph can talk about the negotiations with the salary increases with the unions perhaps, but it's important to bear in mind that if salaries were increased significantly, staff costs are a reasonably significant part of the budget. That money would have to be found from council taxpayers. So again, it's a balancing act. We need to make sure that our staff are looked after and treated fairly while easing the burden on our residents. So Joseph, I don't know if you get anything to add on that.
Yeah, we have just modelled it at the inflation rate, which is the Bank of England's target rate. The discussions between the employer organisations across local government and unison and the unions will take place in the coming months. So yeah, as you rightly put, actually the inflation is higher than that at the moment. But I'm struggling with any other measure to take at the moment. Especially as central government have highlighted the need for constraining public sector pay previously.
Thanks, Joseph. Another one from Graham. He mentions that the budget doesn't have an item directly investing in affordable homes and homes for social rent. He does mention the fact that we've just entered into a joint venture with Sovereign, given the huge need for affordable homes in the district, and then goes on to talk about how it would benefit the district. Well, the authority doesn't have social housing of its own, and that's a policy decision that was made some time ago. You're quite right to point out the joint venture. To depart from that to any significant extent, I think would require a significant policy shift for the council. As executive member for finance, it's not for me to say that that's going to happen or that should happen, but we're always considering the effect of policies on residents. Joseph, I don't know if you want to add to that at all.
Only that to emphasise what you said there, Ross, and as you said, we don't have a housing revenue account, and to create one would be a massive undertaking with a significant, a really highly significant change on what we do as a council, and just having to get to a scale as well of having a housing revenue account, which would enable us to have a sort of major repairs reserve, etc., would mean that likely that we need many thousands of properties within that. So it would be a massive decision for the council.
Yeah, thanks Joseph, and thanks Graham for your question. Another question from James Gore. How much in, quote, incentives have been offered to private landlords to ease the housing crisis rather than to invest in social housing? Well, again, that sounds like a bit of a loaded question about incentives, James. I'm not really sure what you're referring to there. Joseph, any ideas?
No, not through my head.
Sorry, James, I think a bit more detail required there on that one. Annie, again, the budget assumes 1.4 million of savings in the SC, including 350k from reviewing care packages, which may impact some providers and services, clients and families. Is it fair to cut care packages for the most vulnerable? Right, I'm really glad you've asked that question. Yes, there's always savings identified in the services, but there are absolutely no cuts to care packages. There's no cuts to frontline services. Where services can be provided more efficiently and for better value for money, then we'll seek to do that. We've got an obligation to our council taxpayers to do so. But to say again, there are no cuts to frontline services, yeah, I'm happy to confirm that. Joseph, I don't know if you have any more detail.
No more detail than to say that we'll always be reviewing packages, circumstances change, etc., and trying to deliver things as efficiently as we can.
Yeah, and I think that answer covers Karen's question as well. So Karen's talking about the link between child poverty and child safeguarding issues, mental health and family support. Why is there a cut in children's service call? There are no cuts to the services. There may be savings identified in the services, but service users will not be adversely affected by that. Her second question, why show adult as one budget area but split children's services down to smaller areas? What the actual budget cuts for all services for children under 18? Well, again, there's no cuts to services at all. More efficient provision of services is happening. It's actually a really interesting question. I don't know is the answer why we present adult services as one, whereas we split out children, Joseph. I'm going to have to pass you that one.
Yes, you can look at our, so if you Google our budget book, West Berkshire Council budget book, that does then identify down to the cost centre level the budget for 2021-22. So yes, we do so adults as one area together, and then we show children and families as one area together, and there's a strong relationship then also with the education service overall. So it is split a bit across other services, but if you do Google that, then all that detail is available in the public domain.
Thanks, Joseph. Another question from Annie. Assume saving of 450k in mental health services. Is it fair to make cuts here? Well, again, we're not. So I think we've covered that one already. She sees it relates to shared funding, but is it realistic to expect the health service to make good any savings when our own MPs raising questions in Parliament about the poor performance of mental health services in West Berkshire? Well, Annie, all I can say is that we're always working with partners, including the clinical commissioning groups, to have a fair split of funding, and we'll continue to do that into the future. Let's see. David Lister. Hi, David. Good of you to join us. He's talking about secondary schools and a cost of 48 million in the infrastructure delivery plan. Then the draft local plan states that for Thatcher North East would only fund, developers would fund 50%. Where would the remaining 50% funding come from? I'm not sure a local plan question is quite covered in the budget, David, but Joseph, I don't know if you've got an answer to that at all. I think we're sort of straight into local plan development stuff there.
Yeah, I think I suppose as that develops, and we can see it sort of developing further, and there's more detail on what was happening, then we can start to add some of that into the budget at a later date. But I think we need to see that be approved and developed further.
Okay, thanks very much, Joseph. From Anne Shepley. Hi, Anne. Thanks for your question. How much are you spending on consultants and, more importantly, interim managers? So I guess that's temporary staff, agency staff, and consultants fees. I don't have that figure to hand right now. That's Joseph, help me out here. Do we have those figures to hand, and can we share them?
I don't have figures specifically on, say, consultants or interim managers. I mean, we do during the year we do spend a significant sum, so into the millions on interim staff. A lot of that is in, for example, adult social care, where we have a sort of statutory obligation where we must provide staff, especially care homes, for example, and providing a wide range of care. So we do that. We have a contract as well with an organisation where we consolidate all of that expenditure together, and then try to successfully does drive down interim agency costs, so that there's an overall rebate back to the council through finding savings to try and get that agency staffing supplied as effectively and efficiently as possible.
Yeah, thanks very much, Joseph. Good stuff. Another question from David Lister. He mentions the money in the 5-year plan. Presume that's the capital programme for the master plan regeneration for Newbury. There's nothing in the 5-year plan for Thatcham, which is due to start this year. Is this an omission? I think the answer to that, David, is that the current spending in Thatcham is coming from the revenue budget, but Joseph can step in and correct me if that's not the case.
That's right. We've set aside a reserve to fund that piece of work out of revenue.
Yeah, thanks, Joseph. So no, that is in there, but thanks for your question, David. From Paula Saunderson. Hi, Paula. Under the Environment Strategy Delivery Plan, is there any funding for 22 to 23 to install solar panels on our buildings, such as schools and care homes, which are high energy users? Well, we did have, as you're probably aware, an initial programme of installing solar on council-owned buildings. And in fact, that's where a lot of the funding from the community municipal investment went back in 2020 and 21. Some of the schools and other council-owned buildings represent challenges, although Joseph might be able to tell me if we've got plans to put some more in the buildings. But it's probably apposite at this point to mention that we do have funding in the capital programme for a solar farm out in Graiseley, which is currently at the feasibility and business planning stage. But early indications are that that would generate a significant amount of green electricity, as well as being, at the very worst, cost neutral for the council. So renewable energy and solar panels is something that's a big part of our plans going forward. Joseph, I don't know if you have anything else to add on that.
Yeah, so just related to that item, Ross, in the capital strategy over the next 5 years, there's £17.6 million in the provision of sort of green infrastructure, and that's to help develop opportunities take advantage of production, storage and utilisation of green energy. And then there is also another, I think it's £154,000 for more solar PV across the council's estate as well.
Brilliant. Thanks very much, Joseph. From Rachel Tree. Hi, Rachel. Any incentives for developers or potential landlords to create more social housing opportunity on sites such as brownfield and firmer retail units, etc.? I'm not sure about the answer to that question. I'm not sure we have anything specific down to that granular detail in the budget, but as always, our executive director may correct me if I'm wrong.
No, that is, I don't think actually specifically in the budget is in there per se, but I know our economic development team will be looking out to work closely with potential landlords and developers on opportunities which do come up across either the council sites or ones that the council don't own, to see what development can come forward.
Great, thanks for that, Joseph. James has provided further detail about his questions on incentives from the housing strategy. So the council offers a range of incentives to improve partnership. I'm not sure, again, it's the same answer that I'm going to give to Rachel there about the level of detail. I can't give you that figure off the top of my head, James. Joseph, any step for a hint?
I'd have to get some more information from the respective team.
Good stuff. David Lister again. Hi, David. This time asking about a playing field at Hennick-Worthy. Will there be a public consultation be needed, and where will this be located? That is out with my purview as the budget and finance portfolio holder. I think happy to direct that question to Councillor Williston, who's in charge of our leisure strategy. Karen, comment from Karen. She asked what the budget cut was as a total in children's services, not what the service cuts were. Yeah, Joseph, don't know if you can shed any light on that at all.
I'll do some quick math.
Yeah, maybe a quick one. I might come back to you on that one, Karen. So beaver away in the background. Anne's come back on our response to her on staffing costs. She says she's not interested in frontline staff to cover statutory responsibilities. Consultants and interim managers who are probably aware insignificantly more than the going rate of an employee. Temporary staff costs do sometimes attract a premium. That's for sure. But agency staff and consultancy staff do allow the council to deploy its workforce flexibly in response to changing demand. So again, I think we were sort of saying don't really have that detail to hand at the moment, but I think it's important to say that a lot of the interim staff are in those key services. So I'm sorry you're not interested in it, but it's an important part of our staff costs. Not looking to hurry you, Joseph, there, but you've got a task there on the children's services budget change.
I mean the overall savings proposed there is about 350k. So as a percentage of the budget, I'll just quickly do that. It'd be around about 2%.
2%.
Yeah.
And as you correctly say, Karen, that is not a cut to services. That's from savings in the service, which I'm very happy to confirm. Really good range of questions actually tonight, folks, just in general. Thanks very much for sending all these through. And another question from Paula. Hi, Paula. Will the budget for the lead local flood authority function be increased, given the increase in demands from the government FCERM strategy action plan? Before I pass that one over, I can point you to additional funding in the capital programme on flood management. There's, I think, there's 1.6 million going in there for flood alleviation schemes. The specific scheme that you refer to, I'm going to pass that to Joseph to see if he has anything more specific.
No, I don't have anything more specific. I've got a paper actually, executive will be coming through to I think executive in due course, linked to this and some of our functions. But as you said, Ross, we do have some in there in the capital budget, as well as continuing with the existing staffing budgets that we have too.
Great, thanks for that, Joseph. And it appears that we're in a position to start wrapping up now. So lots of really good questions there. And thanks so much to everyone who asked the question and has listened to us talk about finance. Joseph and I are fascinated by finance, and we think it's the most interesting subject in the world, but often people don't share that view. So it's been really good to see lots of engagement this evening. I hope you found it useful. I'm reliably informed that you'll be able to watch this back if you so desire on YouTube, just at the earliest opportunity once we get it up there. So I think we'll leave it there. Big thanks to you, Joseph, for joining us tonight, and look forward to further engagement in the budget in due course. So thanks everyone, and have a lovely evening.